Greetings, Dr. Jeffrey Scott here, and I thought I'd do a quick update on the markets for Wednesday, January 22nd, 2025. The Trump bump continued, technology took charge, and let's take a look at what we are seeing. As always, this is for educational purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You no longer solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should consult with your financial advisor before making trades. And I have tools in multiple platforms. I'm an independent trader. I appreciate the folks that I've worked with and have built their tools in for me. I trade the exact same way, whether I'm using HDSI, Wealth Charts, TradeStation, TradingView, my new Market MRI Pro app, or Metastock. So each of these are very similar. There are small differences, or maybe not small differences, between the platforms. But how I trade them doesn't change. If you're interested in top-down trading and how I do this, I started a free non-commitment group called Top Down Trader on Google Group. Why Google Group? One, I was sending out an email to a small list, and they're all coming back to me as spam, even though they were mostly friends and family. It's bad when you're spamming family, or your family thinks you're spam. So I do it through Google Groups, and they send out an email every time something is added by me or others to the group. I've had a Discord group in the past. I decided not to continue with the Discord group for the main reason I don't have time to answer all the issues that come up. I'd rather do it after hours, answering emails, than checking on my Discord site all the time. If you want to join, just go to Google Groups, look for the group Top Down Trader, join. It takes me a few hours to add you to the group, and then you'll continue to get a note most nights, often with a video attached and some comments of what I'm seeing. And you can quit anytime. You don't have to own my tools. You don't have to buy anything. There's no charge. Speaking of no charge, I have a live event on this Saturday at 9 a.m. Eastern. Typically, these take 3 hours. They're recorded for those that are registered. It's no cost. You don't have to be an owner of my tools. It's really the things that I learned from Ian Woodward and others and how I approach markets from a top-down perspective. Why top-down? What tools do I use? How to identify what looks like a high-value trading opportunity? And I'll talk about some of them. Probably one of my favorite right now is GEV, which I'll talk about why I took the trade and how I've traded. I'll use all the tools that I have. Every tool, whether it's HDSI, Wealth Charts, Market MRI, and so on and so forth. People ask me which is my favorite, and I go, which is your favorite child? They all have different benefits. Now, I yellowed out where it said you had to be part of Top Down Trader. I'm opening this one up, and so you'll see below a link to register in the YouTube site, or if you're getting this from the Top Down Trader site, it'll be in tonight's email. We follow in the Top Down Trader group a leaders list. The reason for this is we know that when the leaders break down, the markets follow, and clearly the leaders broke down significantly, but they never really traded except for one session where they closed at the high below the 50. So I continue to track them because in my mind, this market rally isn't over until I break that 50. Well, we are inching our way up. This red line, which you can see with the cursor, is the chandelier stop, and we're about to break out to a new buy signal on the leaders. That's a positive for the markets. Doesn't mean it's going to go up. Doesn't mean it's going to actually cross over. The market could die on Thursday. But that still says there could be life in the market. Now, over the weekend, I talked about Netflix and the seasonality. This is TradingView. It's got my indicators in it. That's not why I'm showing you. One of the things we did build in, and you can see this, Wealth Charts does an excellent job of that as well, is you can actually plot onto the chart projected seasonality. And we're projecting the high, the low predicted, and the average. And it's not difficult to see what was predicted was a pretty strong move, and that's what we got in the session on Wednesday. Actually, we got it on the after hours Tuesday, and then we sold off a bit from the top. from a 15% gain to a 10% gain. This is usually the best time of season to trade Netflix. And you could see they had a pretty, not a big earnings beat, but they beat on earnings, they beat on revenue. But what they really smashed expectations on was subscriber growth. So hopefully you played it. I actually took profits really early in the session. I entered it for a short-term trade, and a short-term trade, I try not to stay at the trough and be a pig. All right, so let's look at the markets. So before I get to the timing model, I really like the TradeStation for looking at the markets, and I like it because Sagar Nandi, SuperiorProfit.co, has these great automated trend lines, not too many, not too few, and I found they've been really good at for support and resistance. We saw here that the spiders had pulled back almost to the trend lines, and what's cool is they've now broken out above their 50. They are approaching the all-time highs. So it's hard to say we're still in a downtrend here, because the question has been, are we just retracing in a downtrend and then we're going to fail? Or are we breaking out to new highs? I think the spiders look great, at least through right now, which is late Wednesday. The Qs, not quite up to new high territory, but have broken above their 50-day moving average, and another strong session. And I love to see this pile on here where all my signals fired. The CPR signal, the big gap signal, volume, breakout, momentum. So the Qs look good. The diamonds, you have a doji, have still also broken out above their 50. After the big move, perhaps on Tuesday, maybe not a surprise, a little bit of indecision session. Now, the one that still looks like it's in a retracement and a downtrend is the Russell, which came back to support, then right up to resistance and can't break over the 50. UVXY was actually up a bit in the market on Friday, today was it Friday, Wednesday, and the dollar is bouncing on support here. All these green and red support and resistance lines are automatically written to the chart by Sagar's Q memory tool. If I look at commodities, you can see gold and silver have both rallied with the Trump bump. Oil has come down, probably baby drill equals more supply. Natural gas had fallen, but actually had a nice little bounce. Now, those that follow me know that I've been commenting for some time how the 200 had been resistance, and that I was looking for a breakout and a retest, and we got that. The issue is, are we coming back down, or are we going to turn around and go higher? I think natural gas probably goes higher. And then if we look at the 10-year and the 30-year in the markets on Wednesday, let me just pull up the data window. Bring this over to where I want it to be. 10-year was up. Oh, it's not going to tell me. Never mind. Well, just looking at the chart, you could see the 10-year was up a bit. The 30-year, it doesn't look like it was much change whatsoever. All right, so that gives me a sense of what the indices are doing, and except for that pesky little Russell 2000, the indices look pretty good. Now, the next thing I want to do is go into my timing model, and this is the Market MRI Pro app, and the only difference between what you could do on your own in TradeStation or Wealth Charts or any of the other platforms is we actually built in the buy-sell signal down here. So we could see that the spider is in a sell, the Russell is in a weekly sell, and the diamonds are in a weekly sell. So that's all negative. The Q remains in a weekly buy and even flipped the bongo. Now, each of these indices is trading above their WMA. So all it takes is a bongo flip at the end of the week to change their stance. Since we still have 3 negative weeklies, I can't be all in this market. I'm still hesitant, but I am more long than I am short, and I still have some cash on the side. Now, if you want to see it look Totally different. Let's look at the daily. And what the daily tells me is that Spider long, Q long, Diamonds long, and Russell long. And when I think about a retracement in a downtrend, I think the longer trend is a sell and the shorter move is a buy. And so this is a pattern that you'd expect in a retracement in a downtrend. However, when you look and see that, for example, on the daily charts, and we're just finishing the horizontal lines and stuff, so I don't know if I want to even mess with that right now. But you can see on the chart, we're approaching all-time highs on the Spider. It looks like we've turned away the downtrend in the Qs. The Russell, I'm not convinced yet. And the Diamond is somewhere in between. So that's why I'm not short. Even though the weekly model looks like we're still in a downtrend, the daily model is really strong. We've already looked at the indexes and the commodities. Let's look at the daily briefing. Here, what I do in one place, I can look at one-day close, and I look at, I'm boring. I look at the same ETFs. I look at the Qs, the Spiders, the Diamonds, and the Russell. You could see the Qs and the Spiders led the market on Wednesday. You can see the VIX was actually up 1.5%. The VXX. Over here, we could see that at the 4 different time frames on the NYSE and the NASDAQ, new highs were bigger than new lows. If we look at the sector perspective, and we look at performance on one-day change, you can see technology really led this market in communications. So if your portfolio was up, it means you probably have a lot of tech stocks because that's where the strength was in the markets on Wednesday. What led? Uranium, tech software, semiconductors, internet, genomics, artificial intelligence, robotics, NASDAQ cybersecurity, blockchain, telecommunications. This was a tech-driven day. If you look over here, you could see 3 different markets, the S&P 1500, the NASDAQ, and the NYSE. And we asked the question, how many sectors were up? 18% of the sectors, 27% of the industries, and only 28% of the stocks were up today on the S&P 1500. You can see in gray, the prior day was much stronger. On the NASDAQ, we had 39% of the stocks were up, so a little bit higher than the S&P 1500, and 30% on the NYSE. So the NASDAQ led the way, but for the broader markets, it was a negative session. If we look at the buckets, again, the same 4 markets, the NYSE, the NASDAQ, the S&P 1500, and the Russell 2000. And if you saw in Top Down Trader, my video that I posted Tuesday night, I talked about we were at reversal range short term on the NYSE and the S&P 1500, both of which were above 20% of stocks trading above their Bollinger Bands. And I think what we saw was a little bit of reversion to the mean in the markets on Wednesday. Market breadth did not give me any new signals. We could see here that the new high, new lows were positive. The AD line ticked down, as did the up-down volume on the NYSE. And you could see just a small down day on the NYSE, while the NASDAQ, positive on the AD line, the NASDAQ was positive on the new high, new lows, a little bit negative on the AD line, and positive on the up-down volume, and there were no new signals on the bottom grid. So again, my sense of this market is that there's a lot of things going on. It doesn't feel like we're at a bottom. It feels to me like we're closer to a top. So that makes me a little bit hesitant. But I also think we're going to run to new highs before we start to see lower lows. Saying that, I still have some cash. And like I said, I'm more long than short, but I'm not all in by any means. Now, there are a lot of different ways to slice the market, and you can slice the market from a top-down or a bottoms-up perspective. So if I look from a top-down perspective, and what I use for my trading list, and everybody has their own list, is I use what I call the JAS list. That's me, my list. 3,500 stocks. It's the stocks in the NASDAQ, the NYSE, and the Amex that are above $1 and trade over 100,000 shares a day. That's the universe. If I go to the top-down tab here, I can see them piled into their sectors and industry groups. I see a lot of red. So to start with, if I look at the telecommunications was up 0.96 on this body of stocks. Tech was up 0.86 and healthcare was up 0.22. So those are the places that saw some strength. If we look at the, for example, here, the industry groups, we can see that from a percentage perspective, and I think we did it right. Uranium, entertainment, hardware, equipment and parts, computer hardware, engineering, construction, electrical equipment, etc. Now, if I slide this over here, I can make those bigger. Perfect. Now, as a top-down person, I might be interested in communications and technology from the market on, what day is today? Wednesday. And so I've now brought down the 163 stocks that make these up. I like to look at things using what I call the short-term momentum indicator. Now, once sorted, I can start to look at the stocks one at a time. There's Netflix already looked at. Here's Meta. I'm on really slow internet, so you have to forgive the time it takes to load. I'm sitting in an old hotel in Phoenix right now. And you basically would work your way down and look at each of the stocks in the top list. So I'm not going to wait for things to load here. I like top down because, as I'll show you on Saturday, things will run with the market for 60% of the movement. 20%, 25%, maybe more will be the industry group. And it's just the remaining 15 or 20% that's the stock. So I'm not going to wait and run and look at all these, but I can rank stocks by performance, by short-term momentum, etc. If I want to look at the market from a bottoms-up perspective, I would flip out of this view and go into the impulse view. So in the impulse view, I just see the stocks here. And I can do the same thing. I can rank them by short-term momentum. I could rank them, which I might do intraday, by percentage move. I don't like thinly traded and cheap stocks, so I might go in and filter and say I only want stocks greater than 500,000 and price greater than 5. And that'll take the 3533 down to 1,700, which is my universe. And then I can run various scans. So one of my favorite scans that we've talked about here is this 2-day momentum up in a row. And these were the stocks that were in the market on Wednesday that signal this. Now, what's really cool, well, to me it's cool, is I can do this during the session. I don't have to wait till the market closes. So let's just look at a couple. We'll see if we get them. Grail, here's a testing company. Pull back to the 50. Healthcare testing, they look for presence of cancer before it's obvious. And then broke out, big move above the 50. Tons of volume. Now, we actually have fundamentals built in here. Let's see if I can get that. It's this one here. And the next earnings are 211. So I just looked at that to make sure it wasn't an earnings move. That was a pretty big move. And if I look up here at the high jump, you don't see anything because it's an IPO. It doesn't have enough bars. You can see down here a volume breakout momentum and relative strength and OBV are very strong. That might be one to look at. SDGR, Schrodinger, and now my internet picked up some. This is interesting. We're clearly in a downtrend. If we look at a weekly chart, I want to press my luck. Big downtrend, but look what's happened here. Is we're starting to have a big move higher. And if we go back to the daily chart, what we see is we had 2 momentum on the bottom here in a row. We had volume again, relative strength and OBV look great. I ignore the extension when I'm just off the 200. I think it's a math issue and things that are gone sideways for a while, even in a big range, will typically show extended when they're not. REPL, Replimune, nice steady uptrend, had a big move up here and down, broke out above the 50. Look at the dots, CPR, volume, and a momentum, two momentums in a row. And I often find things to buy in this list. CCJ, I know that uranium was one of the strongest groups, and this is one of the big uranium players taking out the 50-day moving average, and it had volume and it had a momentum signal. So what we've built here is a tool that allows you, whether you're looking from a top-down or a bottoms-up perspective, you can go through the market, now the internet works, and you can look at and find the stocks that meet your criteria for buying and selling. And one of the things we're going to talk about Saturday are what are my criteria and how I trade them. Hope you like these videos. Look for the link down below, and please join us on Saturday, or at least register so you can get a copy of the recording. Have a great Thursday in the markets.